All right, so here we are. Today is August 4th. And you know what August 5th is? Sunday? Because today's Saturday. August 5th was the original 90-day extension of the 35% margin hike at the CME group for all commodities. And as I told you, I called the other day, literally early this week, and asked, CME, in a few days, is this 35% margin hike for all commodities kicking in or not? Well, we may get another 60 or 90-day extension. We're asking the CFTC right now. That's all I heard. So I called the CFTC. I asked everybody. I emailed everybody. I even got one response back from a bozo, naturally, who doesn't know anything. Well, that's up to the market, who are self-regulators, such as CME Group. They decide when and how much margin hikes are. So I replied back, yeah, but they said that the CFTC granted a 90-day reprieve. Here's the article from CME Group. This is what I'm talking about. Never got a response back. Naturally. Because when you call into those places, I've learned this because I've called in before. No matter which department they transfer you, no matter who they tell you to talk to, they don't know what the hell you're talking about. They don't even know about a 35% margin hike. They don't know about anything. Thus the response I got. Oh, it's the CME Group's responsibility. They do basically what they want in that regards. No, your company you work for, that your receptionist pointed me to you specifically, by the way, told me I need to speak with you because you are the regulator of all of this, CFTC, and it was you who gave the 90-day reprieve to begin with, not the CME Group. You guys okayed it. No comment. I didn't say it in that fashion. I was pretty nice how I replied. So here's Saturday. We got one day. I have heard nothing about August 5th, potentially bloody Monday on the markets, the commodity markets especially. How the hell did silver rise $1 on Friday right? I don't know. But look at the bank stocks. Look at the Dow. Everything was, markets were great. So all of a sudden a bunch of people wanted to get into silver because of other market news? No. This is all computer algorithm trading. And they allow for silver to rise a little bit whenever there's good news across the board. Let the bank stocks rise more, let the Dow rise more, but let silver rise a little bit. Gold rise a little bit. All computerized trading. However, aside from that, back on topic, really, is tomorrow Sunday, August 5th. What's up? CME Group, CFTC, anybody, news after Friday night, close? No, nothing. Saturday morning, looking around online, nothing. No news. What about the 35% margin hike that's supposedly due tomorrow? Kicks in tomorrow. And they're going to say, normally they'll come out and say, well, you got to be in compliance by Monday or Tuesday or whatever, etc. So I'm browsing around the internet this morning trying to find that news because when they release any information like that, it comes up. You're going to find it as soon as I type it in. So I'm typing in, margin, CME 35% margin, August 2012. I see my bozo face on there. CME was about to raise all margins. I see a few things on there. And then I find an interesting article. Friday, August 3rd, yesterday. CME Group, Inc. announced a decline in their second quarter profit. The CME Group's second quarter profit and plans to cut margins for COMEX silver futures again this year. Huh. Really? World's largest futures market, CME Group, announced decline in second quarter profit, plans to cut margins for COMEX futures contracts again this year. Well, let's keep reading, because what does this year mean? Does that mean like right now, Monday, or, I don't know, sometime later, after we raise it 35% and destroy everybody? That's a question to be asked. In a statement, the CME said its second quarter profit fell 17%. I love it. From a year earlier, as interest rates near zero reduced trading in the company's biggest contract. Now, this does not say what the company's, quote, biggest contract is. Is it silver or something? What is it? Because they're talking about silver. We're going to lower margin on silver. Why would you lower margin on silver if you have another biggest contract as it said, reduced trading in the company's biggest contract. Interest rates near zero reduced trading in the company's biggest contract. So the response, which it says their net income fell to $245 million from $294 million a year earlier. Excluding tax provision charges related to the company's joint venture S&P Dow futures indices and compensation costs, profit was 89 cents per share. The group plans to cut margin for silver futures for the third time since February to help boost trading interest as stagnant prices sapped investor appetite. The CME also plans to cut margins for NYMEX platinum and palladium futures contracts. When? When do you plan on doing this? And are the metals the biggest thing? The CME, is that the biggest contract they're talking about? Could it be? And now everyone learned their game, their paper game. We don't trust you. We don't trust your brokerage, your clearing houses because they fail. You said you guys provide insurance. No one's insuring anything. CME Group's not, especially. Yet you came out, your CEO came out and said you are responsible and you've never had any problems. And if you do, you'll take care of it. And then we have MF Global. Now we have PFG Best. And now this other thing, Dark Knight Capital that just came out the other day. Another problem. People don't want to play your paper game. Less and less and less is what's happening. So I read this, but it doesn't say when. So back on Zero Hedge, I see kind of a similar headline, and I'm going to read it right now for the first time. CME lowers silver initial, and this was posted August 2nd, actually. CME lowers silver initial maintenance margins 11%. Initial and maintenance, hang on. They lower initial margin and maintenance margin 11% effective Monday, 8/6. That's a day after Sunday, the 5th, which is supposed to be the 35% margin hike. So either A, we're going to hear that the margin hike is still on Sunday, Monday morning, markets up, something. People have to be in compliance. Or B, we got another 60-day or 90-day extension. And by the way, as this article says, they said, we're lowering initial and maintenance margins 11% effective on Monday. So are they raising them 35 and then dropping them just silver? And again, raising everything 35%, all commodities margin, and then lowering silver 11? You know, basically whatever 30 or 23 or 20 whatever 24% hike for silver ultimately because they raised it 35% minus 11. It doesn't make sense. This tells me they're not going to do the margin hike on Monday, or technically tomorrow. I mean, why would that doesn't make sense because if they're saying on Monday we're lowering initial margin and maintenance. And then on the day before, which is Sunday, tomorrow, they're going to say we're raising all margins 35%. Everyone's going to be standing around saying, well, then what the hell are you saying? What is this crap about silver? Who cares? You're raising everything 35%. It's going to cause a market decline anyways. Only to find out it's cheaper to get into silver because silver, it's only 11% cheaper to get in because of your 11% reduction in maintenance and initial margins. Therefore, there's a net gain of 24% for silver margin hike. That does not make sense. This right now is telling me there's not going to be a 35% margin hike. And I came in here to do a video to tell you, hey guys, today's Saturday the 4th, tomorrow's the 5th, I haven't heard anything. I may be going to the coin dealer down the street who's open till noon and selling 100 or 200 ounces just to be safe. And if I do that, I'm taking a chance because if the margin hike does not kick in on Monday morning or Tuesday or whatever, and I just sold some silver at either spot price or $1 over spot price if I sell my Eagles or whatever, I'm going to have to go right back out and buy what I just sold for basically $2.50 or so over spot price. Therefore, a $1.50 loss on my part per coin. And if I sold 100 ounces and I lost $1.50, it's $150. If I sold 200 ounces, that's $300 loss that I'd have to deal with. Which is why, and I've always said this, when I'm talking about possibly doing something like this, the safest thing to do is just hold on to it. And if a massive 35% margin hike hits, grab a credit card or some means of getting a little lump sum of cash in your hands and go do an immediate large or whatever size purchase that you can afford to do. If you don't have the cash but you have a credit card, at that time, if they smash commodities, and again, silver and gold with it, because those are commodities apparently, then you could use that credit card to make a fantastic move and then make your monthly payments on the credit card while silver starts to do its crazy climb back up and you bought at the very bottom. Whereas if you didn't have that credit card and you said, well, I can only afford X amount of dollars per week or per month, you're not going to be able to purchase that large amount of silver you just did with that credit card instantly fast enough. You're not going to be able to do it. You're going to have to say, well, it's going to take me 2 or 3 months, let's just say 3 months to pay off 100 ounces of silver. Let's just say, $3,000 worth of silver, and I'm just assuming. It may take people 6 months or a year to pay that off, but I'm being very nice and saying it may take 3 months. If they smash silver right now due to a margin hike or whatever, and people go in with a credit card, or let's say you decide, well, I don't have a credit card, I'm just going to buy as much as I can every week. I can almost assure you, pretty much, as a matter of fact, I can assure you, in 3 months or whatever time frame that you would have been able to pay that off, 6 months, whatever, silver's not going to be smashed where it's at right now, or where they do it, where they smash it to, if they smash it. That's what I'm saying, if they smash it. And I read this, and it's telling me there's no way in hell they're going to do that. Does not make sense. Who would raise it 35%, all commodities, which includes silver, and then on the same day, basically, Monday, by the way, we're raising them Sunday night 35%, but on Monday morning, if you want to play the silver game, you still got to come up with 24% instead of the 35% margin hike. Does not make any sense. This is telling me CME Group is really finally realizing, damn, what we've been doing for our buddy JP Morgan and the government, banking class, is now starting to affect our bottom line. We just had a decline of, what was that number again? 17%? Is that right? Go back to my article there. If I can find the freaking thing. I think I've already closed it. I think it was 17%. Ooh, CME Group, that hurts, doesn't it? People aren't wanting to play the game, right? I'll just take my ball and leave, says the people, because the person who keeps playing ball is cheating, lying, stealing, breaking your ball. You got a new ball. I'm going to play basketball. Oh, the bankers are here again. I'll just take my ball and leave. And then the bankers stand there because they don't have your ball to play with. What do you mean, my ball? What does that mean? Bankers can't do anything by themselves. They have to use your money. And when you lose your money, they are gaining your money. Because as my buddy Greg Vegas, 5909, YouTube, says, and he's absolutely right, he can't get no righter when he says money does not disappear. It only gets transferred. It's just like energy, right? Energy can never go away. It just gets transferred. It transfers its form or whatever, but it does not go away. That's absolutely true. I think that's one of the laws of thermodynamics or something, right? Can't argue with it. End of story. You also can't argue that if everybody has money, just like the game, the board game, Monopoly, everybody plays, you all start with $2,000 each, whatever, right? Okay, let's start rolling the dice and buying up property. And then you land on that guy's property. Oh, crap, he's breaking me. Oh, I'm out of the game. And ultimately, one person wins. The question is, that one person's got all your money. You're standing there looking at it. You know he has all your money. But you were playing a game where you recognized I landed on his property, I owed him the money, he took it. Whereas in the stock market or commodities market, the paper markets, they are also getting your money, except you don't have the privilege of standing around the board, game board or whatever, and saying, oh, this money went to JP Morgan, and that money went to Deutsche Bank, and that money went to Bank of America, and Citigroup, and Wells Fargo, etc., etc., etc. You don't get the privilege of seeing it actually happen that way. All you get told is the market's down today. Your damn stock you invested is down 17%. Your own stock, let's pretend. Let's pretend you're the CME Group. you're invested in the CME Group. Ah, man, CME Group stock's down 17%. Damn, I just lost 17%. What do you mean you lost it? It got taken. And the mindset of people is, well, I made a bad trade, or my trades must have been bad because I lost. I chose to leave it in that fund, and other people who sold must have made out because I didn't have the foresight. So it's my own fault that I lost that money, so everything's good. But if you were able to trace where that damn dollar went, that thousands of dollars of your investment went, if you were actually able to, which you can't, CME Group, CFTC, no, that's private information. We don't share that with anybody. Oh, it's private, and you don't share it with anybody, because if we were able to see where it went, you would see it going right to the bankers. I just read an article days ago that for like the first 6 months of this year, 2012, I think it was Bank of America. I want to say Citi too, or one or the other, but I'm pretty sure it was Bank of America. Not two, but it was either Citigroup or Bank of America. I'm pretty sure it was Bank of America. Out of all the trading on these exchanges, paper, garbage, whatever, all of Bank of America's foresight of we ought to buy here and sell there and all that crap, they only missed 3 trades. They made 3 trades that were not exactly good bets. 3 out of thousands and thousands and thousands, more than likely, of trades that Bank of America did, 3 of them were not good trades. They lost on 3. Would you mind losing on 3 out of, let's just say, 1,000 trades for 2012 thus far? Half the year, we'll call it July, or June, July, whatever. Half the year goes by, and you've only lost 3 times out of 1,000. Would you like to walk into a casino and bet 1,000 times and know I'm only going to lose a number I can count on one hand, 2, 3, 4, 5 times, and I'll win 995 times minimum. I may win 1,000 times, but I'm not going to go worse than 995. How can any logical or even bozo human being, even a bozo, how could they sit here and say, well, man, they must have the market strategy of a lifetime? You know, Bank of America, they must have just got lucky. Must have just been a coincidence that they made thousands of trades or whatever. Or maybe it was hundreds. Let me be real fair with Bank of America. Bank of America is prestigious, so let me be real fair. Maybe they only made a few hundred trades. How about 200? How does that sound? Would you still be interested if I could tell you a strategy to win out of 200 times, you may lose 3? Matter of fact, you might lose 5. Just to be fair. Super fair. OJ Snip, the super fair YouTube guy. That was a bozo statement. You can go ahead and forget I just said that. 200 times, 200 trades. 200 trades on the stock market. All kinds of different stuff. And you only lose 3 times. How's that sound to you? It would sound not almost too good to be true, but absolutely too good to be true. Bank of America did it. JP Morgan always does it. And so do the other banks. How is that possible? They can't possibly be trading against each other, because you couldn't have JP Morgan making phenomenal trades, never losing, and then Bank of America also making trades, never really losing, Citigroup making trades, never really losing. Well, all the big banks happen to make trades that they never really lose. Like every now and then, just 1 or 2 here and there. As I said, 3 out of God knows how many trades for Bank of America. And they all seem to be profitable. They all seem to know these trades as if they know the future, with 99.5% accuracy. Phenomenal accuracy. How could that happen? I just explained it. Greg Vegas had already explained it. How? Money doesn't disappear. It gets transferred. So for every losing bozo, sheep, peasant, taxpayer, consumer, I could have pulled out, but I thought it was going to go up. I don't care what you thought. I don't care your reasoning. It doesn't matter. Your money was going to be taken from you. You wouldn't have been able to make a good decision. Put it that way. Because they are the ones making the decisions that make your stock price go down so that you sell it or do whatever, and then they buy it up at pennies on the dollar, and then it goes back up after there's no reason for it to go back up. And then when they decide to crash it down a little bit, they sell it way in advance of anyone even knowing. The market doesn't even really move. And then the event happens that causes the market to go down. The news comes out, whatever, nonsense. Market goes down. Everyone's panicking to sell. They've already sold. They're already sold at the top. Goes back down again. Dow 2,500. Breaking news. Mario Draghi of Europe says he's going to combat the situation. Markets rally 300 points. What's he going to do? Says he's going to combat the situation. But what's he going to do? Doesn't matter what he's going to do. He's just going to combat it. The markets love it. The news loves it. Dow's up 300 points again. Down 100 points the next day. More fake news. It's up to 13,000. We're back up to 13,000 again. Man, there might be a recovery. Bad news comes out. Back down to 12.7. More bad news. Back down to 12.5. Oh, crowd. Oh, this is it. All the conspiracy websites. This could be it, guys. This could be it. It's going... ECB to buy European zone bonds. Markets rally 300 points. Every rally the elite have already sold. Every rally at the top of every rally the elite have already sold. And then it goes down, and it doesn't matter if it only goes down in, let's say, a 2-week span. It goes down 600 points. But it doesn't look like it all in one day, so it's not like, oh my god, it's just over a week or two. So it doesn't look like it's too bad. But when you look at the percentage, it's a little bit, a little significant, several percent drop in the market, let's say, right? Now they go and buy back in. And the market doesn't move really when they buy back in. Or maybe it moves a tiny bit up, and then some great fake bullshit news comes out. Markets rally. They've already bought back at the low again. Back up to 13,000. Dow, great. S&P's back up. Bank stocks are back up. All right, boys. Rinse and repeat. Sell their stock while it's up. No, who would do that? Who sells the stock while it's going up? That's crazy. If you know it and you're doing it, you're making it happen, then it's not dumb, it's not crazy. It's a plan, it's an agenda to rip off people. Your money is being taken when you lose, it is taken from them or from you and given to them. Money does not disappear. So, having said all this, 11% margin decrease for initial and maintenance. What is initial and what is maintenance? And I've explained it before, but I get new subscribers and maybe they don't know what I'm talking about, so I'm gladly going to repeat it. What is a initial margin and what is a maintenance margin on, let's say, any contract such as silver? Initial is the amount you have to come up with to play the game. Just to open up a paper futures contract in your name, get yourself one little contract or more than one. But if you get more than one, then the initial buy-in becomes more than one. So, initial silver margins, a full-size standard 5,000 ounce contract. And again, the 5,000 ounces that contract says you own never even existed. But that's another story. 5,000 ounce contract. Right now, the buy-in, the initial, was $18,900. Maintenance was $14,000. So, what do you mean? What is the difference? You have to put in $18,900 to play the game, but they also require you to put in another $14,000 as maintenance. Well, what is maintenance? Maintenance is that, let's say the price moves $1. 5,000 ounces, and it dropped $1 in price. Your contract says 5,000 ounces. You just lost $5,000. If you didn't have the maintenance thing for 14,000, they'd be calling you immediately. Hey, you bought in at $18,900. It's down $1. You're down $5,000. We need you to instantly wire transfer $5,000 to us right away. That's a margin call. So they have maintenance. That way, if it drops $1 or $2, $2 times 5,000 would be $10,000 loss. They don't want to have to constantly work the phones every day, every minute, telling people, hey, it's down 10 cents, margin call. Hey, it's down 5 cents. Hey, it's down $1, margin call. That maintenance is like a little nest egg to where you can withstand $1 drop or whatever, or $2, etc. That way you don't get a margin call. your money still goes away. So you put in basically $19,000, and then you have another $14,000. It's a lot of freaking money to play one paper contract. You have that nest egg, the margin, the maintenance margin that you're sitting on, that you put in the account. You have to, or else you can't play. And it just went down $1, and you say, "Oh crap, I'm out. I'm selling my contract." You're out. Now it's down, and you decided it's at the bottom. I want to get back in. You do realize you lost $5,000 because it went down $1, and you got out. That $5,000 is gone. It's never coming back. So if you want to play again, a week later it's down. It's back down. It's down $2. Now I want to buy in because I sold my contract. Right? I lost $5,000. I want to buy back in. Well, guess what? You're $5,000 short now, because you lost $5,000. So if you want to play at the lower $2 price right now, to get back in, you got to come up out of your own pocket with another $5,000 to get back in. Because again, the margin is the same, initial and maintenance is the same. So you lost $5,000, you sold your contract, and you're on the sidelines. Now I want to get back in, but you got to come up with another $5,000 to replenish the other one you lost, because the maintenance margin is $14,000. You lost $5,000 of that. So now you got to put back in. And by chance, the market went down some more. You sold again. See how that works? You can't win unless you get extremely, extremely lucky. But those guys on the end, the other end, who see every trade, who see everyone who has a futures contract, they know exactly who has a futures contract. They know exactly when it expires. They know exactly what's out there. Therefore, they know exactly how to move the market to steal your money from you. Even if it's a $2,000 here, $5,000 there. It doesn't matter. And then you think, well, I'm just going to get back in a little later. Fine, think whatever you want, but they took your money. This wasn't some rainy day, cloud came over, my position was just not good today. It was fine. You have bankers that are stealing it. That's the damn problem. So that's my explanation of 11% margin hike or decreasing. Now, I didn't exactly get specific. It was $18,900 buy-in or initial margin and $14,000 maintenance fee. The new price come Monday is they're taking $18,900 down to $16,875. And the maintenance is being cut from $14,000 to $12,500. Hey, come back in, guys. We notice you guys aren't trading too much lately. Our profits are down over here at the CME group. We need more people to steal from. And the traders out there, hey, I can get back into silver. It's come down a little bit. I think I may want to get in. Bozo trader, paper trader, you're an idiot. Yes, you know that. Okay, just making sure. And they're going to do the same thing to them. So why do they want to put a 35% margin hike out right now when they just had a terrible Q2 profit loss? They'll do it if they're told to do it by the club. You know that much. But at the same time, maybe they feel like, well, silver's kind of staying where it's at. We've tried all we can to really push it down. This is where it's at. All right, let's just go back to normal mode and let silver rise again. Who knows? I'm done talking. I'm holding on to my silver. I don't care what news comes out right now. I'm just going to wait and see. If they smash the prices, yellow. More like this, actually. Evelyn. Honey, come here. You still got those 2 credit cards? Yeah. I'll give her the old Seabass call. Seabass, come here. Yeah, listen, I want about 300 ounces, and Seabass is going to pay for it. Anyways, take care.